Investors are anticipating a return to normalcy in the economy and the stock market following the 2020 health crisis. However, Bank of America analyst Haim Israel says the pandemic will have a lasting effect on the world and the company is changing it. Companies and consumers are generating more data than ever. Big governments are taking a more proactive approach in global economies, and the younger generation of investors are now focused on social distancing, the digital economy, and environmental sustainability, says Israel. Here are 7 of Bank of America's top tech stocks amid the health crisis and for the post-pandemic world. Hey there, this is Stockspert. I make videos about personal finance and investments, exploring the investing world to get more returns. If you wanna see my other videos, check out card section and the video description. And please like the video and subscribe to my channel, and let's go! And today we are reviewing Bank of America's 7 top tech stocks, and in the end of the video there's a surprise for you with 5 more stocks to consider. So watch the video till the end. And the first company is Amazon. Amazon shares were up more than 65% through early August despite the crisis, a reflection of how perfectly positioned its major businesses were for a shelter-in-place economy. In the second quarter, Amazon reported blowout earnings and revenue numbers, while much of the rest of retail sector is struggled. Online grocery sales tripled. Amazon Web Services revenue increased by 29%, and net income roughly doubled from a year ago. Analyst Justin Post says pandemic accelerated long-term shifts to online retail and cloud computing, 2 markets where Amazon dominates. Bank of America has a buy rating and 3,560 price target for Amazon stock. And by the way, how much commission do you pay for the ETF and stocks transactions? Let me know in the comments. And if you'd like to buy stocks and ETFs at zero commission, check out eToro investing platform by the link in the description of the video. And let's move forward. The second company on the list is Microsoft. Microsoft is Amazon's top competition in the cloud services space and has been gaining market share from Amazon in recent years. Microsoft's Asia revenue was up 47% in second quarter. Microsoft's gaming business is also thriving as millions of bored people are stuck at home. Xbox content and services revenue increased 65% in the second quarter, up from just 2% year-over-year growth from first quarter. Analyst Kash Rangan says Microsoft is a secular growth story with attractive margins and a reasonable valuation, while Bank of America has a buy rating with 250 price target for the Microsoft stock. And I do actually have Microsoft stock in my portfolio. And the third company stock is Alphabet, aka Google. Shares of Google parent company Alphabet are up about 9% so far in 2020, but the stock has lagged most of its mega-cap tech peers because of concerns about online advertising revenue. Alphabet even reported a 2% drop in overall revenue in the second quarter, the company's first ever quarter of sales negative growth. However, Alphabet reported that both search and YouTube advertising revenue growth accelerated in July. Analyst Post says Google Cloud and YouTube subscription growth should help support the stock while the advertising business recovers. And Bank of America has a buy rating and $1,730 price target for Google stock. I know that Amazon and Google stock prices may not be afforded by the most investors, but you may want to buy fractional shares. And for your information, eToro investing platform allows buying fractional shares, so you don't have to pay $1,730 for one stock. And the next stock in our list is Facebook. Facebook in recent years have been facing negative headlines wave after wave, but despite the controversy, the company's business and share price continue to shine. Facebook's latest hurdle was an advertiser boycott targeting hate speech on its platform, but the boycott seems like didn't make a dent in Facebook's numbers. The company reported 11% growth in the second quarter. Post says company still has a number of long-term monetization opportunities, including Facebook Messenger, WhatsApp, Watch, and e-commerce. Bank of America has a buy rating with $290 price target for Facebook stock. And the next stock is Alibaba Group Holding. Like Amazon, Alibaba is China's leader in the e-commerce and cloud computing. Alibaba has also had many positive catalysts in 2020, including a trade deal between US and China in January and a potential $30 billion IPO of its Ant Financial affiliate. In the most recent quarter, Alibaba reported 62% cloud revenue growth, more than doubling Amazon Web Services' 29% growth rate. Analyst Eddie Leung says that Alibaba will likely remain the long-term leader in China's online retail space. Bank of America also has a buy rating with $301 price target for Alibaba stock. And here's another stock from Chinese company is Baidu. Baidu is the leader in online and mobile search in China. As with US search giant Google, Baidu has seen revenue drop slightly by 6.5% in its first quarter because of the health crisis. Revenue from its online video platform, I'll spell it IQIYI, was up 9% year-over-year. Analysts say Baidu has successfully transitioned its business to a mobile model, and it's expanding advertising products to better monetize its massive user base. Over time, Baidu has a number of additional growth opportunities, including its video platform, maps, and apps. Bank of America also has a buy rating with $186 price target for Baidu stock. And the last stock on the list of Bank of America is Nvidia. As the global economy becomes more digital and complex, it will need a massive amount of processing power to support it. Analyst Vivek Arya says that Nvidia is his top stock pick in the semiconductor group because of its huge long-term opportunities in data centers, cloud computing, gaming, artificial intelligence, autonomous vehicles, and other high-growth fields. In May, Nvidia reported 39% growth of its revenue for the first quarter, including 80% data center growth. Analysts say the company has a solid balance sheet as well. Bank of America has a buy rating and $520 price target for Nvidia stock. All the above stocks may seem like a very common at a glance, but there might be a really good potential, at least in a long-term period. But if you say, hey, these stocks are too simple to know, give me some stocks which are really for growth and might be the next FAANG stocks. Here are they. Just click on this and get to know about smart stocks. And let me know in the comments what do you think on these stocks. And don't forget to like the video and subscribe to my channel. See you in the next video.